All right, morning everybody. I think we're on like episode 8 now of Coffee and Charts. So, without further ado, I have already done the charting on the things that I have on my weekly watch list, which are pretty much always the same. Um, my weekly watch list really doesn't change. My strategy is always at the beginning, especially if you're a small account starting, right? Like the strategy is always at the beginning of the month or the week, I should say, to focus on the cheap option contracts. So when we go through my list, I have a few of those. We're going to be looking at things like American Airlines, Bank of America, the cruise lines, anything under $1 when it comes to an option contract is what I'm going to consider a cheap contract. Mainly because you still have the time value till the end of the week if you're going to play the weekly contracts, which is what I do here. So we'll go over the charts. I'll kind of talk about that strategy a little bit more, and then we'll go from there. So first one on the list, we're just going in alphabetical order here. American Airlines, we are coming up to the end of the month. We're 2 on the month right already. We've hit 2 down. We started to get a little bit of retracement kind of early on. So down here in the lower left-hand corner, if you're looking at the day, things started kind of coming up with the rest of the market. And SPY was moving back up. So was American Airlines and pretty much everything else. Now we're kind of going downwards again. We had a 3 to finish out the week, which also gives us our new weekly low. So under 1583, we're going to be looking for a move down to like the $15 range. So this green bar here, this is my theory on liquidity zones. Basically, I'm looking again on any time frame, really focusing on the daily and the weekly though for big bounces. So here was a bounce. We see like wicks and things of that nature. So here was a big bounce. If we scroll back further, here was a big bounce. So the theory here that I have is I mean, I think a lot of people share, but price has memory. So we come back down to that $15 area. I'm either going to be looking for a bounce or a drop through, kind of like we saw here. And they do get dramatic when they kind of come through that range. So I generally try to avoid trading in those areas. I'll trade the bounce, but I definitely avoid trying to trade like as we're sitting there in that area, because I've also noticed it becomes consolidation. So anyway, back to American Airlines. So like I said, 2 down on the month, we have a failed 2 up on the previous week. So what we're really going to be looking for here, and I don't actually have, I guess I do actually. So I moved over my weekly labels to the left side here, so that messed me up for a second, sorry. It got too cluttered on this side with all the text. So the daily low and the weekly low are going to be the same at 1583, and then at that point we'd be triggering a 2-2 reversal to the downside on the weekly, and then just also a 2-2 reversal to the downside on the daily. So American Airlines is one of those things that I'm going to be watching in the morning. Again, that move coming down to the bottom of the broadening formation. Say that 3 times quick. To like the $15 range. So that would be what I'm going to be looking at on Monday and Tuesday and possibly Wednesday if the move doesn't complete. We get past $15, then we're going to be moving down to, we have another area of, that guy there. We have another area here and down in the $13 range. So, I mean, that's literally the next area to take out price action. So, again, we see a dramatic move down. I'll probably take this trade even though we do have that liquidity zone, but I'm going to have a really tight stop loss going through here in case we do get a dramatic bounce, or depending on how the market looks, dramatic drop. All right, so that's the game plan for American Airlines. Next on the list, I'm actually gonna go through the Dow ones, the one that I'll be trading Monday, Tuesday, Wednesdays first, and then we'll go look at some of the tech that usually trade towards the end of the week when the contracts become cheaper. So Bank of America, again, 2 down on the month. We had a 2 down on the week, and Friday made a 3 in outside bar. So we're going to be looking at either a 2 down or a 2 up. So what's the sentiment here? I mean, I'm just looking at a drop. I'm looking at a drop. I'm looking at a, more controlled drop. And then we have the 4-hour, which we might as well not even have anything there, but whatever. So, sentiment obviously bearish on Bank of America here. Now, I know that like Warren Buffett went up and bought a bunch of banks up, like Citigroup and things like that. So he's saying, things are cheap right now. That's good. And that's, typically the mentality there, right? You want to buy low, sell high. So have we met the lowest for Bank of America? I have no idea at all. But, the fact is we're in a downtrend still. And until I start seeing an actual reversal on the weekly, I mean, heck, we even got this, 3 on the weekly a couple weeks ago, and then the next week ended up being down. So I'd like to see a couple weeks going up before I say that we're maybe done with a slight correction. So okay, game plan here. Well, Bank of America, again, let me kind of change the. Bank of America has a lot of support below it, but that support is old. Try to scroll this way some here so you can see. So this support comes back all the way from like February 2021. So it's over a year and a few months ago. So that's a lot of old support there. We're going to start taking that stuff out if we continue to drop through, and then we have a liquidity zone down in the $30 range. So, I mean, again, it's hard to be bullish on anything right now. So I'm going to be keeping my sentiment for Bank of America to the short side, the bearish side. And here's my, again, the targets. So if we do end up triggering, the 2 down day and the 2 down week, then the next price target is going to be 32.40 and then 31.78. The magnitudes really aren't that great. That's kind of what I'm pointing out here by having my daily targets. Now this one, 31.78 to 30.88, that's almost $1, so that's pretty solid. But when you're sitting here talking maybe like a 50-cent move, that's nice. It's an easy win, but you're not going to get a big percentage win. So what I would end up doing is, take the small wins and get out while you can, that 20-30% profit, and then, get out and then do it again and again and again. So that'd be my game plan with Bank of America. All right, CCL. So very similar to Apple or American Airlines and Bank of America, nice cheap weekly stock. So again, the point of the weeklies is if you were to enter with my strategy with the weeklies, I should say, is if you were to enter the market on Monday with $500, what can you do with that $500? Well, you could go get like 1 or 2, contracts of, a tech stock, probably like 1 Microsoft or 1 AMD, couple Apple, or you could, get 5, CCLs or 1 CCL and turn it into a 100% move. So again, the whole goal here is to try to grow that capital, that initial $500, so that when it comes to doing something on Thursday and Friday, you have more capital, more capital to be able to play with, to be focusing on those tech stocks that are really expensive at the beginning of the week, but now quite cheaper because they're about to expire. So okay, CCL, again, big 2 down month. We had, triggered the 2-2 reversal here around 17-18, and we're just continuing to slide down. Really the next area of support, considering we've kind of taken out everything else, is going to be that 12-11 area. And that comes back from October of 2020. All right, so we did a 3 on the day, and we'll be looking either a 2 up or 2 down. If we go down, well, now we're moving to 12.11, 11.34, 10.75. And just like earlier, the support, actually, I looked at this, the support goes back to like from coming from the COVID drop. November, October, down here. Yeah. So we're moving like April, May of 2020 now. This is the state of the market. We had something that shut down the economy in 2020, and now we have a bunch of crazy things that have been happening to drive the market down. So very different reasons as why the drop, but at least this is more controlled. Anyway, so now the one thing to note here is we're coming to the bottom of a broadening formation. I've taken 411, the day of 411, and the day range of December, and that's what we are creating for the bottom of our broadening formation. Again, the point of a broadening formation is to give you an area where price discovery could potentially reverse to try to come back to the upside a little bit, come through a range. So they do act as resistance and support, but they're not hard and fast. If it falls through a broadening formation, well, it's no different than it falling through the horizontal price level that you have here, saying, man, I really thought $12.11 was going to be some serious support. So support doesn't necessarily go horizontal. All right, so anyway, plan with Carnival. Well, if we do go below 12.70, I'll be looking at like $12 puts. If we keep going down, I'm going to tighten my stop loss. I might even ladder into some $11 puts, so on and so forth. So Now, the one thing I'll caution you with Carnival is that it does get very volatile very quickly. It seems like so. When you're sitting here looking at the contracts for, I mean, like you get an at the money contract for 40 cents or so. So again, that's nice and cheap. You can buy a couple of those and still have some money in your um, money in your portfolio, like actual cash in your portfolio, to still make another play or two. So that's why, again, at the beginning of the week, I really focus on these kind of the cheapies, let's call them. All right, so again, those the nice thing is, again, you do have, I don't know if you noticed that or not, but you do have, like, for all of these that I'm going through right now, you do have like 50-cent increments on contracts, so you can get the 1350s. Like I said, for very cheap. You don't have to necessarily get the 14s or the 1250s or anything like that. They're all pretty cheap. All right, the next one would be Draftkings. Now, I point this out every week, and then I keep forgetting to trade it. I forget to set alerts, which is fine. That's on me. But the cool thing about DraftKings is, for some reason, while everything's going down, it's kind of sat here. I think it's. I'm actually wondering if it's met its bottom. People are like, you know what, $10 is cheap enough. Especially with all the sports betting going on and things like that. So, we did end up seeing that. Yeah, we did end up seeing let's see, a failed two down. So, let's see what happens. But the trigger to the upside on the month, next month, would be over 1588, but we're not there yet. We'll be talking about next month, I think, at the end of next week. Yeah. So anyway, we did get a pretty solid two up. So we did get a 2-2 reversal on the weekly. So over 1465, we'd have a 2-2 continuation to the upside on the weekly, and then we'd be looking at like the 15, 16, $17 range to start taking out these former bearish price targets. Now, what do we see on the daily? Well, the daily, Friday was kind of a sell-off day. We had a lot of movement from $10 all the way up to 14, $15. So, there had to be some breathing room. There had to be some breathing at some point. So here's the breathing. And again, over 1455, that's when we'd start seeing things I'd really want to see, because again, these previous 2 days are very close to Friday as far as price targets go. I'd want to see a break of that weekly high. I want to see a 2-up week before I'm going to say go in and get on in DraftKings. So over 1465, that's what I'm looking for. And then you can start seeing that you'll have price targets along the way, $15, 1550, so on. And just like Bank of America, CCL, everything like that, it goes in 50-cent increments. It's weird, DraftKings is the one thing that we're talking about maybe getting calls in right now. Yeah. All right, next on the list is Ford. Ford's an oldie but goodie. So what do we have here? Well, we have a 2-down month, just like everything else except DraftKings, apparently. 2-down week, and then we had a 2-down day. So pretty much 2-down across the board. We had some failed two here that just pretty much almost was a shooter, indicating more downside. So below 1207, so below 12, let's make it 12, mainly because 12 is a pretty solid psychological level. If we bust through 12, then we're going to be looking further down. 1179, and then what, let's see. Oh, wow. So again, we're going back. So we got 1179, and then this guy here, it's hard to draw lines on tiny thingy. Okay. All right, so 1179, 1162, 1133. So you could, those are all pretty close together, and Ford moves about $1 or less than $1 a day. So actually, all of these are very realistic price targets. So what I'd be looking at here, 2 to the downside, underneath $12, I'd be looking at like the $11 puts or something of that magnitude. Nothing too far out of the money, or the 12 or the 1150 puts maybe. Again, depending on where we end up going under 12, right? So we want to see the break of 12. So at that point, heck, you can even get like an in the money contract for a really, really quick gain if you want to take things down a little bit more. That, because again, they're just cheap, right? Like, a $13 put right now in the money is going for $68, something like that. So yeah, either way, I typically play at the money, rarely go in the money, but Yeah, at the money's not too bad. Uh-oh, gotta mute somebody. Hold on. No, okay. Got him. Okay. Next. All right. So that is pretty much it when it comes to. Oh, we got let's see, Neo, I think. Yeah, Neo's on the cheap side, so we'll go look at Neo right quick. So Neo's probably the last one, and then we move over to tech. But what do we got? Well, we have a 2 down month that is kind of looks like it might be flipping to green, so that could become a failed 2 down pretty soon if we continue this move up, because we had a pretty solid 2 up week. So what we're going to be looking at here is a 3 day. So we had an outside day on Friday. So the 3-2 up for over 1760 to 1822, and then we got the 3 down under 1568, and then you start seeing, you know, the moves, the price targets on the downside. Now we do have, interestingly enough, that liquidity zone. Again, this just seems to. I think I made that liquidity zone. Yeah. That one is solely based off that bounce that we had on the 12th. So we do have this, you know, interesting little bounce area, liquidity zone. So we come down to the bottom of the Browning formation potentially. It just does seem like, you know, Neo's been pretty bullish lately, you know, against everything else that the market's doing. So Neo's always something I'm going to keep my eye on. I like it. And yeah, so anyway, over 1760, 1822, and then 1989. Again, the contracts themselves are relatively cheap. So you could be looking, instead of Neo, maybe like Lucid. I pretty much stick to what's in my watch list, but you know, Lucid has a lot of the same movement up while everything else has kind of been dropping down. It's already flipped green on the week. Or on the month, I'm sorry. And that, you know, failed 2 down, and last week was a pretty big indicator that we might be flipping, and then, you know, just was a victim of all the sell-off that everything else was a victim of, I think. So Lucid's another great option. Okay, so that's going to be covering the Monday through Wednesday stuff. So then what happens? Well, if I show you right now, so again, pretend you walked into the Monday with $500. So the contracts will drop a little bit in price, but if you're playing an at-the-money contract for Apple, for instance, you're going to spend $293 right now, roughly, to get one contract of Apple. Well, that is more than 50% of your portfolio that you just walked in the week with. I personally don't want to be risking 50% of my portfolio. That's why, again, Monday, Tuesday, Wednesdays, I'm willing to risk, you know, 25%, let's say, let me rephrase. I'm willing to spend 25% on a potential play. As far as risk goes, that's a very different deal, right? You set stop losses, you have trailing stop losses. So while you might be spending $100, you're only risking $10 or $15, you know, to hope that to see that play goes in your direction. So that's, again, one of the main reasons I trade the Dow stocks on Monday, Tuesday, Wednesdays. So then Thursdays and Fridays come around, these contracts become a lot cheaper. All right, so what are we looking at? Well, we have a 2 down month, a 2 down week, and then a 2 down day, but it kind of almost went hammerish. So we could be seeing a 2-2 reversal to the upside. We got 140.70. Now these gray lines, I had former broadening formations that are just kind of grayed out. I want to keep them there just for historical sake on Apple, since I do trade it quite a bit, but you know, just keep them there. Just want to see what it does. So instead of clearing out my lines and things like that I usually do, I'm just going to try to keep them there on Apple. Yeah, so anyway, what we have here, 2 down underneath 132.61, and then you got some really, really close consolidation. Also, the bottom of a broadening formation, drawn. Gosh, I don't even know what that was drawn on. Oh, probably the month, yeah. Yeah, so month, week. Yeah, it was drawn on the week. So there we go. So yes, now what we're looking at, like I said, below 132.60. I'm so sorry if it's loud. 132.61. We just keep moving down. 129, 127, 124, 123. So tight stop losses when it comes to Apple. you're going to want to be seeing a lot of, you want to make sure you stay in profit. Hold on, let me tell my dog to be quiet. Okay. Then we got Apple. All right, or I'm sorry, that was Apple. AMD, we have a failed 2 down right now. AMD is by far one of my favorites to trade. I know I say this day in and day out, but it's just one of my favorites. So failed 2 down on the month. The week we had a previous failed 2 down, and then we have a failed 2 up on the previous week. So last week didn't go exactly as planned for AMD, just again a victim, I think, of all the selling off that was going on. So big old, big old 3 and then a 2 and then a 2 that kind of fought its way back at the end of the day. So below 88.26 for a move down to 83.27. There is a liquidity zone I have drawn, dating back to I don't know when. Probably around here. So we're looking at like July of last year, 2021. So we'll see if there's a bounce. I mean, there definitely was here. So again, price to me has memory, and that's kind of why I've been doing this. Putting these things on my chart and kind of drawing your attention to them as I go through them. All right, so now what we have here again, a pretty solid buy at the end of the week. So I mean, the 4-hour candle here, that was the second half of Friday. So that pretty much drove things back up a little bit, but we still ended up with a solid 2 down. So in the event that we do get a reversal, 98.64 to 100, 100 does seem to be a pretty solid area of resistance. We broke through it and then immediately came right back down. So it's just watching it last week, you had this guy 100-ish, and then this area 104. So again, 100, 104 do seem to be areas of resistance. So be aware if you're walking in and wanting to trade some calls, because you do see a move up. I'd be waiting for it to definitely show some life, getting over 100. It's probably going to come back down and retest and then go right back up if it does, or it's going to completely fail. So things to keep in mind for AMD. That's what I'd be looking at. Again, I'll keep it up on my charts all week. That way on Thursday I have a really solid game plan of what I want to do. But again, we did get a 2-up week, so the downside reversal, the 2-2 reversal to the downside would be under 88.26 for a move to 83.27. Just watch out. That liquidity zone does have some actual memory supportish type stuff. All right, next on the list, Facebook. Facebook was a 3-1, so that's what we have on the month right now. So we still are an inside month. If we look at the week, we have just a bunch of failed 2s, almost. It looks like a failed 2 here, and then we have a 2 up, but almost a failed 2. It just ended up being a shooter. Then we have a 2 down with a hammer, and now we have a 2 failed 2 up with a almost doji-esque type indecision candle. Not a lot of decision there, but that body's a little big for being a doji candle. So what are we looking at? Well, on the week, the downside trigger would be under 187.87. And the upside trigger would be over 205.37. But again, the 2-2 reversal, since we did have a failed 2, kind of indicates that we're moving to the downside. What is this area? Well, if we take a look at the daily or the 4-hour, that is a gap that still has yet to be filled. It's tiny, but it's there. It basically goes from 185 to 181.21. So keep that in mind too. So you have 187.87 all the way down to potential. If we do break through the 184.86 area, then 181.21 is definitely where that gap fill. That would be my price target that I'd be looking at there. Okay, so that is Facebook. Then we got Microsoft. Okay, let's see. 2 down on the month, 2 down on the week, and 3 on the day. So a lot of downside on Microsoft. So in the event that we're looking at a 2 up, you'd be looking over 258.54 for a move to 263.60. On the way down to 46.44, and then there is a liquidity zone. Let me go ahead and expand this way. So why did I draw that? Well, look at this guy. So let's see if I can actually. One thing I do not like about Thinkorswim. Okay, so I drew the liquidity zone here. There was, and this is probably one of my more experimental ones, mainly because I just see a lot of bouncing around it. But when it did decide which direction it wanted to go, back in June of last year, it just kept going up. So I did the liquidity zone there, and then if I scroll this way, we're kind of coming to that liquidity zone now as well. So I'd probably want to see a break below 243 before I'd say, like, I think I'm ready to be looking at puts again for Microsoft. But very, typical. You got Thursday and Friday, so you can watch, see what it does Monday, Tuesday, and Wednesday, and then take advantage of those cheaper contracts on Thursday and Friday. Play the downside. Now, do note we are kind of at the bottom of a broadening formation. I mean, if I zoom out, you can pretty much see the trend. We've been kind of bumping the trend and then bumping it again and bumping it again. So that's another option as far as how to play Microsoft. Maybe you want to actually play the bounce. Maybe you want to play the bounce. So it does come down here, let's say, below 243, and then maybe bounces up. Or again, you could see that drop through. So below 243, you got 232.39 and a very tiny liquidity zone. Upside play, well, they're popping balloons now. That's great. I was brave to do this session, wasn't I? All right, so 2-2 reversal on the week over 268.33 for a move to the upside. So that is the week. Got a lot of ground to cover, but if anybody could do it, Microsoft can with an ATR of almost $10. Next, MU, very similar to AMD, not necessarily memory. It's going to be more of, actually Micron is memory. AMD is going to be like microchips and video cards. But so we got a 2-1 on the month. MU's been very interesting to me. Like when the Qs aren't doing well, MU's okay. It's very odd, but it's been fun to watch. But we've had a couple weeks of just kind of teeter-tottering back and forth, right? Like you can see it here. Open here, close here, open here, close here, open here, close. I mean, we're basically back to where we started at the beginning of, at the end of April there as far as, the price. So this is an area of consolidation. That's what's going on right now. And if you want to look at it on the daily, you can just kind of see it seesawing back and forth. We haven't necessarily taken out weekly highs or weekly lows. The previous week, we finally moved up a little bit. 2 weeks ago, we moved up. And then we back down. So MU is just interesting. Now, why does that interest me? Well, if there's something predictable like this, where we can be aiming at a previous week's high because we are going to be moving up and then bouncing back down, that's obviously interesting, because that gives us a pretty close price target as well as something that's kind of predictable. Now, at any given point, we could be breaking out, right? We could go 2 up on the week and go further, or we could go 2 down on the week and drop further to kind of expand what we're looking at here, break out of the consolidation. But to me, if I'm going to play MU, I'm going to get in and get out very quickly because of the fact that things are going to likely, seesaw back and forth. Again, just know what you're doing. Based on the historical movements that you see, and then you can make an educated decision on how much profit you should take, when you should take profit, or if you should try to hold it for a longer term. Would I be trying to hold MU right now? No, I wouldn't. Why? Again, it's up one day, or it's down a few days, it's up a few days, it's down a few days. So MU is going to be the quick hits for me, definitely the 20 to 30% wins. All right, so those are the tech stocks I really like to trade on Thursday and Friday. Last but not least, we'll look at SPY and QQQ. They've been nothing but bloody. So what we have is a 2-down month expected, 2-down week definitely seen, and a couple 2-down days, a bunch of 2-down days, and then we got this slight move upwards, which when I was looking at this, I'm just like, I just don't feel like we're ready for that move to the correction isn't over. Let's call it that, right? Like this, nothing's changed in the news. This was the last day J-Pow spoke. And then it's like people realize what he says and like what he says, and then they drive the price up, and then the next day there's a massive drop because they actually digested what he said. Then you have a day of consolidation. Called this one too, by the way. That was very interesting. I just noticed like the last day he talked was on what day? The 4th. So he talked on the 4th. Price drove up.
I was actually in some puts on this day, so that they got wrecked very quickly. And then we had the massive drop down. So if I held my puts, that would have been great, but I didn't. And then, risk management. So and then the next day was pretty much an indecision day, as you can see here. And then that's what, I equated the 519 day to. So again, price does kind of have some repeatability to it. So that's the stuff that you kind of look for. So the next day, we got a 2 down. So this is almost a hammer candle. It's not a failed 2 though. It's definitely a hammer candle. So definitely not a hammer candle yet. We definitely want to see a smaller body, but that is that's pretty gnarly to see the buying kind of come back in. Does that indicate a reversal back up? Not necessarily. I still don't think we're done. While we don't necessarily like to trade the news, the fact is there is no good news. So what would indicate a reversal? All right, so what we're doing, we're looking at a 2 down week under 280.21, and then that's going to be, let's see why I drew this. I said this last week too. I know it. The blue line. Oh yeah, there's a gap. There's a little gap fill between 280 and 276. So that's something to be aware of too. We drop below there. That could be potentially quick move to the downside. We have the broadening formation here as well. And then we have a liquidity zone down here in that 270 area, that right below or right above the next price target of 266.97. Guys, this is pretty crazy. What we're seeing with the stock market. If you've never been part of a bearish market, welcome to it. And there's money to be made on both sides. So there's no reason you need to be sitting out and saying that, I'm waiting for things to go back up. All right, so that's QQQ. And then SPY, well, we had a 2 down month still. I keep saying we had. It's still the current month, y'all. I'm so sorry I keep saying that. I've moved forward because I'm going on vacation this weekend, so I'm already there. So then, then we had a 3, an outside week. And then we had a 3, another outside day. So what we're looking for here is going to be... let me move that line here. I don't know why I didn't move that. There we go. So we're looking at either a 2 up or a 2 down. Now, if we go 2 up, you're looking at a trigger over 4857 for a pretty solid move to 429.66. If that happens, well, the market's fixed itself. That's just too big of a move, I feel. So what I'm really looking at is more downside. Again, I don't care either way. We make money on both ends of the spectrum here. So over 397.03, we could see a potential move to the upside, right? Like maybe another, since we're moving down, maybe we see another pullback to the upside before another drop down. And this is me. I'm saying this without knowing what the actual schedule is yet for this week. I don't know if the Fed's talking or anything like that. I don't know what numbers are coming out. I'll look at that stuff tomorrow morning. But the point is, to the downside here, we did kind of bust through a broadening formation a little bit and come back in. We do have a liquidity zone here between that 385 and 383 area that we just bounced off of and back, went through and then back up. But the 2 down, the 3-2 down day under 380.54 for a move down to 372.64, and another liquidity zone. Things are getting tight here. Let's call it life support right now, y'all. This is very real. So just keep that in mind. As of right now, I've been playing things with very tight stop losses. And then if things start dropping very quickly, I just move my stop loss up so that I can make sure I lock in some profits. That is really the strategy. And, pretty soon I'll start coming out with some series that I'm working on for how to, create wealth with $500, because it is possible. Some other things that had outside bars that I'll throw in here right quick, just based on some of the alerts in Discord. AMAT had an outside week. CAT had an outside week. Cisco had an outside week. Big outside week. Holy moly. They must have just had tanked their earnings. Oh yeah. Earnings and then drop. Yep, go figure. Sure, China's lockdowns haven't helped any. FedEx had an outside week. Coca-Cola had an outside week. Look at that drop. That was a day I believe the retail numbers came out. I want to say. So definitely a victim of retail numbers there. And then obviously SPY had an outside week that we went over. As far as failed 2 ups, indicating that potential reversals are coming through. Interestingly enough, gas or oil, I should say. So failed 2. Here we go. So we'd be looking at a 2-2 reversal to the downside underneath 162.83 for a move to 157.87. And then Oxy was another one that we watch in the with the bots. Let me clear out the drawings here. So then we got a failed 2. So underneath 61.47 for a move down to 56.91. So again, idea is to keep your move going downward, but tighten your stop losses so that you make sure that you remain in profit. All right, so that's really going to conclude this episode of Coffee and Charts. I hope to see you all in the Discord in the coming week, and let's make some money. Remember, last but not least, if you haven't yet, subscribe to my YouTube channel so that you get the alerts and things like that when I do create content. Take care.